Why is Brent oil dropping today when the monthly trend is a strong buy? What's the real Brent oil support zone that could trigger a freefall if broken? How do you trade a Brent oil breakout prediction around $100 with a binary geopolitical event? What are the crude oil supply shock scenarios for 2026? And why is the Hormuz risk premium turning oil into a black swan machine? Brent crude is trading at $97.08, and the entire market is pricing in a 70% chance of a Hormuz supply shock. But here is what nobody is telling you. The chart is flashing a hidden exhaustion signal, while the herd is positioned for the wrong outcome. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. Session bias right now. We are in a coiled spring, fading intraday pressure, but building energy for a binary breakout. This is not a trending environment. This is an anticipation structure. And there is one single level that will flip the entire bias instantly. A daily close below 93.80. Write this number down. If we break 93.80 today, the entire bull architecture resets and we are talking about a freefall into the low 90s. Now here is the micro insight that matters. The herd is heavily long because of the monthly strong buy signal and the constant headlines about Hormuz, but those longs are trapped above $99. That is a massive liquidity pool sitting right above us, and market makers know it. That zone between 99 and 100 is a magnet, and it will be raided before any true trend emerges. Keep that in your head. Let's go top down, because oil is the geopolitical heartbeat and you need to hear the pulse on every time frame. Weekly chart first. The 20-week moving average is sitting at approximately 94.80, and the 50-week moving average is just above 92. Price is coiling right between them, and the weekly MACD has gone completely flat, zero conviction. That tells you the big money is not committing. They are waiting for the binary event. Now step down to the daily chart. This is where the trap becomes lethal. The daily 20-day moving average is at 99.00, and the 50-day moving average is at 98.05. Price is stuck below both. That is short-term bearish pressure, no question. But look at the 100-day moving average, sitting way down at 91.91, and the 200-day at 83.40, massive separation. That means the medium and long-term trends are still technically bullish. They are just being strangled by this risk premium compression. The daily MACD is negative at -2.54. The RSI is at 46, not yet oversold. But here is the crack in the bearish armor. The stochastic is all the way down at 23, deeply oversold. That is a bounce coiled and ready. It only needs a catalyst. Now for the chapter timestamp at 1:15, I told you to write down the critical invalidation level, 93.80. On the daily, that is the line in the sand. It is the support that held multiple times, and a daily close below it would crack the structure. Above it, the long-term bulls still breathe. Drop to the 5-hour chart, the active intraday battlefield. The MA20 on the 5-hour is flat at 97.25. That is your intraday pivot. Every rally in the last 3 sessions has been rejected right there. The MA60 on the 5-hour is at 98.49, which aligns perfectly with the key resistance level from our data. So you have a resistance cluster, 97.25 as the first wall, 98.49 as the second, and the ultimate gate at 170. On the 60-minute chart, the MA200 is sitting around 94.20, giving plenty of room below, which means the path of least resistance in the very short term is still a grind lower, but only into that support zone. This multi-timeframe alignment is painting a clear picture, a compression triangle between 93.80 and 170. The breakout will be violent. And here is what most traders miss. The options market is currently pricing a 3 standard deviation move if Hormuz gets blocked, but spot price has barely moved. That is a volatility vacuum. When that vacuum breaks, it will break in minutes, not hours. Now at 3:30, I want to show you the hidden divergence that changes everything. Stay with me. On the 5-hour chart, price has been making slightly lower lows over the last 2 sessions, grinding from 97.80 down toward 96.50. But look at the RSI on that same 5-hour window. It is printing higher lows. That is a classic bullish divergence, and it is clean. Buyers are absorbing the selling pressure silently, accumulating on dips. The MACD on the 5-hour is also curling up toward a bullish cross, while the histogram bars are shrinking. That is the first domino.at the same time. The 1-hour chart confirms this exhaustion. The bull-bear indicator at -0.61 is deeply negative, but turning flat. This is not a chart that wants to collapse. This is a chart that is being artificially pinned by uncertainty. So when the news hits, the reaction will be asymmetrical. The upside has far more stored energy than the downside from here. As long as 93.80 holds, I will say this plainly. The daily chart is bearish momentum. The 5-hour chart is screaming exhaustion and divergence. The weekly chart is neutral. That dissonance is exactly why the herd is confused, and why you can get ahead of them. Let's connect the news. Yesterday's catalyst was an Iranian military spokesman mentioning the Strait of Hormuz. And within minutes Brent spiked $2, only to give it all back. That is the binary DNA of this market right now. If the strait gets blocked, we are losing 2 million barrels per day of supply, and Brent is not stopping at 100. It goes to 110, 115. If diplomacy diffuses this, the risk premium evaporates and we revisit the low 90s in a free fall. There is no middle ground. This is the geopolitical heartbeat beating on a knife edge. But there are crosscurrents you must track. The dollar index is testing 105 this week, and every tick higher in the dollar is a headwind for crude. At the same time, S&P 500 gamma levels are pinning equities at 6,000, and oil has been trading tick for tick with equity sentiment as a demand proxy. If equities roll over, crude will feel it, but if equities hold and Hormuz escalates, crude decouples instantly. Over the next 1 to 2 weeks, I lean directional. I want to be a buyer on a spike down into the 93.80 to 91.59 support zone, but I am also prepared to chase a confirmed breakout above 170. The invalidation for the bullish view is a daily close below 91.59, which would open 90-30-5, so here is your second interaction point. Do you think oil breaks 100 this week? Comment yes or no below. I'm tracking consensus and I will reference it in the next video. Most people skip this section. That is exactly where the money is made. Keep watching. I'm about to give you 3 trading plans with exact entries, stops, targets, and the on-screen cards you can screenshot. If you are serious about trading this binary event, do not click away. Strategy 1 is the sniper, a conservative breakout momentum play. This is for the Hormuz escalation scenario. Entry condition. We need a 1-hour candle close above 170 with a volume spike that confirms the supply shock is real and shorts are panic covering. Stop loss goes at 98.49, right below the 5-hour MA60 and the previous resistance cluster. That stop protects you if it is a fake breakout. Take profit 1 is at 104 even. Take profit 2 at 108.50, giving a risk-reward ratio of roughly 1 to 4.2. This trade is completely void if price fails to hold above 170 on a daily closing basis. A false breakout will crush longs, and right now, here is the on-screen trade card for the sniper. Screenshot this. The sniper, conservative. Entry, 100.75 on 1H close above 100.70. Stop loss, 98.49. Take profit 1, 104.00. Take profit 2, 108.50. Risk, reward, 1:4.2R. Invalidation, void if daily close below 100.70. Trade setup 2. The active trader. NRD strategy 2 is the active trader, a mean reversion fade inside the range. This works until the binary event resolves. Entry, sell at 98.49 on a clear bearish rejection candle. Look for a wick and a 1-hour close back below that level. Stop loss goes above 170. You are giving it room for a false breakout exactly at the range top. Take profit 1 is 95.0. 0. Take profit 2 is the critical support at 93.80. That is a 1 to 2.5 risk-reward setup, and you trail your stop to break even once 95 is touched. This trade is invalidated if we get a daily close above 170, then the range is broken and you step aside. Here is your on-screen active trader plan, snap it. The active trader, standard. Entry: 98.49 on 1H bearish rejection close below. Stop loss: 100.75. Take profit 1, 95.00. Take profit 2, 93.80. Risk, reward, 1:2.5R. Invalidation: void if daily close above 100.70. And now, your third interaction cliff. Type your Brent range for tomorrow in the comments right now. I want to see the high and low you're expecting. Let's see who's aligned with the map. Strategy 3 is the aggressor, a high-risk countertrend buy for the brave. This is the panic flash play. If a de-escalation headline hits and price spike crashes into the 93.80 support zone, you buy the wick. Entry at 93.80 on a sharp rejection, stop loss at 91.50, tight, because if this level goes, the structure is broken. Take profit 1 at 96.50, take profit 2 at 97.25, right back into the pivot. This is a scalp, not an investment. It is only for those who can lose small and manage risk aggressively. Invalidation is a 4-hour close below 91.50. If that happens, cut it instantly. On-screen plan for the aggressor, here it is. Entry: 93.80 on sharp. Rejection wick. Stop loss: 91.50. Take profit 1, 96.50. Take profit 2, 97.25. Risk, reward, 1:2.3R. Invalidation: void if 4H close below 91.50. Trade small, no exceptions, never risk more than 1 to 2% per trade. No positions through high-impact news like crude oil inventories or OPEC headlines. This market gaps, it doesn't slide. Stops are non-negotiable. This is how you survive to trade the next big move. The single most critical level for the next session is 97.25. Hold below it, and the bears keep control of the intraday game, grinding toward 95. Break above it cleanly, and we are racing to test 100. Tomorrow's wildcard is the EIA inventory report, which could drop a supply surprise right into this binary setup and trigger the move before anyone is ready. If you want the full breakdown on Bitcoin and the S&P 500 divergence, and how it ties back to oil's risk heartbeat, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.